UnitedHealth Group Incorporated, often referred to simply as UnitedHealth, stands as one of the most influential and significant companies in the healthcare sector, not just in the United States but globally. With a business model that encompasses health insurance services, healthcare delivery, and healthcare data analytics, the company has positioned itself as a cornerstone in both public and private health systems. Headquartered in Minnetonka, Minnesota, UnitedHealth has expanded its reach through its two major divisions, UnitedHealthcare, which provides health benefits, and Optum, which focuses on health services including pharmacy care, technology, and data management. From a personal perspective, UnitedHealth's success seems to stem from a combination of aggressive strategic growth and strong internal financial management. They've mastered vertical integration in healthcare, buying physician practices, building out IT platforms, and developing predictive data analytics. This allows UnitedHealth not only to manage risk more effectively but also to improve patient outcomes and reduce costs. As an investor, this strategic direction inspires confidence. You're not just buying into a health insurer, you're investing in a comprehensive, data-driven healthcare ecosystem. Let's begin by looking at the fundamental metrics. As of recent reports, UnitedHealth boasts an impressive EPS, earnings per share, of over $22, reflecting robust profitability. Their P/E ratio currently sits around 21 to 24, which is reasonable for a high-growth company in a relatively stable sector. Revenue has continued to climb steadily year over year, with the company reporting over $370 billion in annual revenue, a staggering figure that places them among the largest publicly traded firms by revenue. Net income consistently trends upwards as well, recently surpassing $20 billion. What's more, UnitedHealth pays a dividend, with a dividend yield hovering around 1.3%, not massive, but solid and dependable, signaling strong financial discipline and shareholder commitment. Now, turning to financial health indicators, the company presents a sound profile. UnitedHealth maintains a debt-to-equity ratio of approximately 0.7, indicating they're not overly leveraged and have a manageable level of debt compared to their equity base. Their current ratio, hovering around 0.8 to 0.9, shows they manage short-term obligations effectively, although slightly under the ideal 1.0 mark. Still, this is not unusual in the healthcare sector where steady cash flows are the norm. Crucially, the company boasts significant free cash flow, consistently exceeding $20 billion annually, providing it the flexibility to reinvest, acquire, or return capital to shareholders. Looking at growth metrics, UnitedHealth continues to impress. Revenue growth has remained strong, typically in the high single digits or low double digits year over year. This is a significant achievement for a company of its scale. Earnings growth mirrors this trend, underpinned by operational efficiency and scale advantages. Market cap has ballooned to over $450 billion, placing UnitedHealth among the elite group of mega-cap companies that provide both stability and growth potential. In terms of valuation metrics, UnitedHealth shows a price-to-book ratio, PB, around 5.5 to 6.5. While this might seem high, it reflects the market's belief in their strong intangible assets and operational efficiency. The PEG ratio, which compares the P/E ratio to earnings growth, hovers around 1.5. This suggests that while the stock isn't cheap, it's fairly valued considering its consistent and high-quality growth trajectory. Now let's look at the performance metrics. UnitedHealth's beta is about 0.7 to 0.8, indicating lower volatility compared to the broader market. This is significant for investors seeking growth without extreme price fluctuations. Additionally, the 52-week high/low range showcases a steady and gradual upward trajectory, with relatively few dramatic dips, again, reinforcing the perception of UnitedHealth as a safe harbor in turbulent markets. From a personal evaluation standpoint, I believe UnitedHealth exemplifies what a modern healthcare company should strive for: efficiency, integration, and innovation. Their investment in technology, particularly through Optum, positions them to stay ahead of the curve as the healthcare landscape continues to evolve. Whether it's predictive analytics, virtual care, or pharmacy benefit management, they're leading rather than following. Of course, no company is without risks. Regulatory challenges are always looming in the healthcare industry, and changes in U.S. healthcare policy can impact profitability. Additionally, competition from newer, tech-driven health startups could eventually pressure margins. Yet, UnitedHealth's scale and adaptability seem to place it in a strong position to absorb or adapt to such changes. In conclusion, for investors looking at UnitedHealth Group as a potential investment, the data points and strategic vision paint a compelling picture. With strong earnings, reliable revenue streams, manageable debt, growing cash flow, and consistent dividend payments, UnitedHealth offers a balanced blend of growth and stability. The company's strategic moves, especially in digital health and data analytics, suggest that it's not resting on past success but actively shaping the future of healthcare. If you're an investor who values consistency, innovation, and long-term growth potential, UnitedHealth should definitely be on your radar. In a sector that is often reactive, UnitedHealth is proactive, and that difference could define long-term shareholder value for years to come. Investors who are closely analyzing the healthcare sector should view UnitedHealth not only as a stock but as a benchmark for what long-term operational excellence looks like in healthcare. The organization has built an integrated empire where each moving part, from insurance to pharmacy benefits, from data science to clinical care, is designed to work together, creating efficiencies and extracting value. It's this ecosystem mindset that sets UnitedHealth apart from many of its peers. For those watching financial trends and planning their entry points, the company's price action has demonstrated resilience even during broad market corrections. Its dividend policy, while conservative, has consistently increased over the past years, signaling management's long-term confidence in cash flows. This is especially appealing for dividend growth investors. UnitedHealth's approach to capital allocation deserves credit. They reinvest intelligently, make strategic acquisitions, like the recent addition of home healthcare providers and telehealth platforms, and still have the bandwidth to return value to shareholders. The company's commitment to reducing healthcare costs and improving outcomes through technology isn't just a mission statement, it's a business strategy that's been translating into real-world results and financial gains. In the context of macroeconomic challenges such as inflation, changing healthcare laws, and shifting consumer expectations, UnitedHealth still appears to be navigating with clarity and purpose. Few companies can manage regulatory risk, tech innovation, and operations at this scale, and still produce double-digit earnings growth. In the end, the numbers don't lie. Solid fundamentals, excellent financial health, clear growth prospects, fair valuation metrics, and stable performance indicators all suggest that UnitedHealth Group is a well-rounded, strategic pick for both conservative and growth-focused investors alike. It may not deliver the quick gains of a tech startup, but it offers something even more valuable to many investors: resilience, reliability, and relevance in a sector that touches every life.